Alright, so now let's turn our attention towards manufacturing firms. We've seen the non-manufacturing firms in detail up till now, and non-manufacturing firms are those firms that are buying goods from outside, so they do not have any other production or manufacturing cost. But now we will turn our attention towards manufacturing firms. What the manufacturing firms are doing, they are producing the goods for which they would need to buy raw material, there would be a need to hire labor, there would be a need to pay any factory overhead. So all these costs have to be accounted for as well. Now for manufacturing firms, once we have drawn the sales budget, we draw something called the production budget. The production budget is the key budget that links all the production costs faced in the firm and also the movement and inventory. We just learned earlier how movement and inventory is recorded for. So the production budget will be something similar to the purchases budget for a non-manufacturing firm. It will use the same equation, units sold. We will add the closing inventory of finished goods over here. Remember, we're talking about finished goods, less opening inventory, the units that are already available in stock, and that will give you the units produced. Now, this units produced will help us figure out how much raw material to buy, how much labor to be hired, what will be our forecasted labor cost, what will be our forecasted factory overhead. So all those costs can be linked to this production budget. And very often on the exam as well, you will see that they will test the concept of the production budget because it accounts for the movement in inventory. Now, similarly, once you have the production budget, figuring out the labor cost and everything else does become simple. But for raw material, that is something that firms have to buy, because to produce these goods, they would need to buy raw material. Raw material will also have inventory. So we draw another budget that is linked to it called the raw material purchase budget. You guys should also know how to draw this. Now this budget will start with the units produced. So remember, this units produced comes directly from our production budget. The production budget helps us calculate the number of units produced. So the next budget will start with this figure over here. So we will start with this units produced. Now we will add any closing inventory of raw material. Now remember, we're talking about inventory of raw material. We will then subtract any opening inventory of raw material. That will tell us the number of units to be purchased for raw material. And obviously for this raw material, that will come with a dollar cost. There will be a dollar per kg cost. So if we multiply these units by dollar per kg, that will help us calculate the forecasted raw material cost for that month. So for every month, we will be able to forecast the raw material that we will have to buy. That becomes again another outflow in your cash budget, right? So the production budget helps us figure out the raw material purchase budget, but some other costs that we can calculate once we have the production budget, we would need to calculate the direct labor cost that comes from the production budget, the variable production overheads, if there are any overheads in the factory that can come from the production budget. So all the variable costs that we have learned in the past can all be forecasted using the production budget. For raw material, we would need a budget like this, but direct labor and variable overhead can just be calculated by multiplying the cost per unit with the units produced every month. Alright, so for manufacturing firms, we would have to draw the production budget and also the raw material purchase budget if there's inventory of raw material, which will help us draw up a cash budget for a manufacturing firm and forecast different costs. Alright, so in the coming videos, we will take a look at how to draw the production budget and the raw material purchase budget.